Hi, and welcome to the Stockscores Market Minutes for July 2nd, 2012. This week's topic, the stock market is not fair. You can subscribe to the free weekly Stockscores newsletter at stockscores.com/newsletters.asp. Well, I've often said that the stock market is not fair. What I mean by that is many investors are trading on information that is not widely known. The market tends to price in significant fundamental change before the news is made public, and if you wait for that news, you are a dinosaur because the market will have already moved. Fortunately, when people are trading on new private information that is significant, there is a tendency to create abnormal market activity, and we can follow that. Ultimately, that abnormal activity is a clue that significant price change is on the way. Now today, on July 2nd, there were 3 buyouts in the market that were important and notable, and all 3 followed abnormal price and volume action in the prior week. Let's take a look at some charts to show you what I mean. Here's a chart of Brightpoint Incorporated, symbol CELL on the NASDAQ market. And on June 27th, at the green circled part of my chart there, this stock not only had an abnormal price gain on a 13-minute interval, but also traded abnormal volume. And you can see as the day wore on, that stock continued to make a significant price jump upward. Well, 3 days later, the market found out that the company is being bought out, and the stock jumps up to $9 a share. Another example from today, Amylin, again another buyout, jumped up to roughly 30.75 today. But if we go back to June 26th, in the green circled area, we can see again that abnormal price action and abnormal volume telling us that something was going on at the company. And my final example, Lincare Holdings, LNCR, again, big jump up on news today, jumping up to nearly 41.50. But the action started June 27th. Around the middle of the day was when we really saw that big price jump with abnormal volume, although it was heating up right from the open of trading. And this shows us that the market was moving on at least the rumor of a potential deal that would cause that stock to jump up significantly. So the point is, if you can look for this abnormal price and volume action, you can often predict big price change that comes after it. What's important is that you focus on the first bit of abnormal price action and recognize that it's not going to work all of the time, and therefore you need to use a stop loss order in case the market's message is wrong. All right, let's get into the analysis for this week. Here is a chart of the S&P 500, and it is a chart that is improving, but still not a great chart. We have falling tops, that's a sign of pessimism, but we have also started to build rising bottoms, that is a sign of optimism. It looks to me like we're going to perhaps rally a little bit higher until we hit resistance at that red line on the chart, and then likely bounce lower, and probably over the next few weeks bounce around inside this pattern. Now if we can break out of this pattern either up or down, that should start the next phase of a trend. But my expectation is now that some of the problems in Europe are clearing up, the market is going to be more focused on earnings, and we will look toward the real earnings season starting July 9th with the release of Alcoa's earnings. The Toronto Stock Exchange was closed today. However, the chart remains in a downward trend. You can see that the cycle of falling tops has not been broken. That's the red line on the chart. We are, however, showing some stability over the last 6 weeks as bottoms slowly start to rise. So this is an improving market, but certainly not yet one that we should be bullish of, and therefore I recommend caution with trading most stocks on the Toronto Stock Exchange. The VIX is an interesting chart because last week it broke down through important support. Now, of course, the VIX, which is exemplified here by the ETF of the VIX, VXX, is really an indication of fear. And what this chart shows is that the fear of a major economic catastrophe is diminishing. Because the VIX is dropping off, really what that implies is that the volatility premium in option prices is also falling off, and that should tell us that the market really isn't trading so much on a worry of a big volatile move, rather trading more on the story of companies and what their stocks are able to do because of those stories. TLT is a good indication of whether money is still chasing safety, And you can see that the upward trend in the bond market is still underway, but we are testing that upward trend line. Now, if we break that upward trend line, it would imply that money is coming out of the safety of treasuries and back into the stock market. We haven't really seen that yet. We're certainly sort of testing that sort of process, but I would remain fairly cautious with stocks simply because the money still looks to be going into risk-free assets. US dollar took a big drop down when the European Union met and decided to bail out their banks. That took a lot of the need for some safety in the US dollar away. But the pattern here is still relatively neutral with a slight pessimistic bias, and therefore we can't be too pessimistic on the US dollar. I think in the short term it may rally back and test that red line before going lower. Chart of gold is in a pessimistic pattern. The long-term upward trend line was broken a few months ago. We are now in a pessimistic pattern, as you can see with the falling tops in this chart as we move down towards support. That implies that the long-term outlook for gold is to have lower prices, and my expectation is that we will ultimately get a break of support at that green line. Now, if the red line is broken, that's the cycle of falling tops, well then we'll have to change our opinion. But for now, the market remains pessimistic on gold. Oil has really sold off in the last 2 months. It fell down to support. Not a real surprise that it would bounce off support like it did last week. It does have the potential to make a further bounce because it is so far below that pessimistic downward trend line. And so we may see a tradable rally in oil on the bounce back, but I remain relatively pessimistic on oil overall. So my ratings then, neutral on US stocks. That pattern looks to be heading sideways in the short term. Canadian stocks are bearish, but if we can break that downward trend, then we can switch to neutral. Gold, we are bearish, and oil, really bearish long term, but in the short term there could be a bounce, so I put a neutral rating on oil for this week. The fear of a major economic catastrophe is being priced out of the market. We see that through the VIX. Issue now is whether earnings will be better than expected to drive some money back towards stocks. Look for stocks to bounce up and down in the near term, as there's a fair bit of uncertainty as we go into earnings season, and perhaps oil bouncing back from oversold conditions. Well, that has been the Stockscores Market Minutes for July 2nd, 2012. Have a great week in the market and trade well.